Hello and welcome to Solution Loans. This short video covers a guide to guarantor loans. Guarantor loans may not be new, but their recent growth has opened up an avenue of unsecured credit for people who are finding it hard to obtain it. This may be because they have not built up a sufficient credit history, or because they have made some mistakes in the past which have resulted in a lower credit score. Repayment terms for guarantor loans are longer than for either payday or instalment loans, and therefore they offer correspondingly lower APRs. The loan is backed by a third party, a guarantor, who promises to repay the loan should the borrower fail to keep to the terms of the loan agreement. By having a third party guarantee the loan repayment schedule, the lender does not have to give such a close consideration to the creditworthiness of the borrower. As a guarantor loan is unsecured, no assets are put at risk. So, how exactly do guarantor loans work? Guarantor loans are generally available for amounts from around £1,000 to in excess of £10,000, with repayment periods from 1 year to more than 5 in some cases. They differ from standard unsecured loans in that they are 3 parties involved in the agreement. There's the lender, the borrower, and a guarantor. By signing the credit agreement, the guarantor commits to making the loan repayments or settling the loan should the borrower become unavailable to keep up with the loan repayment schedule. A guarantor can be absolutely anybody as long as they have no direct financial link with the borrower. This therefore excludes spouses or partners. Most lenders will look for a guarantor to be at least 21 years of age or over, have a good credit history, and in some cases be a UK homeowner. Many lenders will now lend to borrowers with guarantors who don't own a home, provided that this person has a good credit record. In both cases, even though the lender may not place huge emphasis on the borrower's credit history, it will still expect them to demonstrate that they can keep up with the loan repayments. Much smaller guarantor loans are also available. This is where a borrower can apply for anything between £50 and £750 over a short time period. These, unlike payday loans, are repayable in instalments. Interest on this kind of guarantor loan is charged daily, so repaying quickly can keep the cost of the loan to a minimum. So, why would you apply for a guarantor loan? If you're new to the credit market and don't have a sufficient credit history, or if past difficulties have left you with a less than good credit rating, it can be difficult to raise the money for a larger purchase, such as a new car. If you are in this position, then you may want to consider a guarantor loan. It could open up access to larger loans than other forms of credit traditionally offered to people with lower credit scores. Interest rates for guarantor loans are generally lower than for other forms of unsecured lending, where there is normally a credit history issue to be catered for. You can borrow money at an average APR of 45 to 50%. If you need money quickly and have trouble sourcing other forms of credit, like unsecured loans or credit cards, then a guarantor loan could be a fast solution. If you meet the criteria for eligibility, then a guarantor loans are usually paid direct to a bank account within 24 hours of the application being completed. So, what are considered the downsides? If a borrower should fall behind on repayments, then the guarantor will be legally bound to either bring the schedule up to date or repay the loan in its entirety, depending on the terms originally agreed and the conditions of the agreement. Furthermore, the guarantor could also be liable for any extra charges on the loan. It is therefore extremely important that both the borrower and the guarantor are fully aware of the ramifications of a potential breach of the loan terms and conditions before applying for a guarantor loan. Friendships and relationships are also at risk. Although the interest rates charged are lower than for payday or instalment loans, guarantor loans are still more expensive than traditional forms of credit. Borrowers should also be aware that in some cases the APRs charged on a guarantor loan are variable. So, in conclusion, guarantor loans could potentially open up large sources of funding for borrowers with less than perfect credit scores, whilst also keeping interest payments vastly cheaper than other payday loans or instalment loans. If you had trouble gaining finances from high street lenders, then having a guarantor may make it much more likely that you'll be accepted for this type of credit. Most guarantor lenders will even let you repay early without incurring any extra charges.